Trump just slapped Canada with 25% tariffs on key materials. Will this crash Toronto real estate, slow construction, raise prices, or could it actually lead to cheaper homes? Hi, my name is Pawel, and I am the founder and broker of record with Coral Realty. Make sure to subscribe to this channel and hit the like button so you don't miss future updates. If you're buying, selling, or investing in this market, don't go in blind. Every move should be strategic. Let's talk. Click the link in the description to book a call, and we'll figure out your next move together. Trump is back in office, and one of his first big moves, slapping a 25% tariff on Canadian lumber, steel, aluminum, and 10% tariff on energy exports. This isn't just about trade, so let's break it all down. What's happening, who's getting hit the hardest, and whether this is a short-term disruption or something bigger. So what does Trump actually want? Officially, this is about border security and fentanyl control. The US wants Canada to crack down on drug smuggling. But here's the thing, Canada has already tightened restrictions, and yet Trump is still saying no concessions, tariffs are staying. So if this isn't really about immigration or drugs, what's the real goal? This looks more like economic pressure. The US has a long history of using trade leverage to push its partners into making bigger financial or policy concessions, like many other countries have. One example, Ireland in the 19th century, when British trade restrictions crushed local industry, forcing deeper economic integration with the UK. Think, is Canada becoming the 51st state? I hope not. And here's something else that Trump has repeatedly complained about. Canada doesn't allow US banks to compete in our market. Could that be the real concession he's after? If US banks got access, it would massively shake up Canada's financial system, impacting everything from mortgage lending to small business loans. So could this actually be a play to break into Canada's banking sector, or is it just another move to force Canada into economic submission? With Trump in his final term, he has nothing to lose. And when a major trade partner starts squeezing your economy, you have to ask, what's their long-term game? So who gets hit the hardest in Ontario? Not all of Ontario will feel these tariffs the same way. The biggest impact will be in manufacturing hubs like Hamilton, Windsor, and London, where steel and aluminum are key industries. A 25% tariff makes Canadian steel less competitive, leading to fewer orders, production slowdowns, and potential job losses. Toronto, on the other hand, relies more on finance, tech, and real estate, so the immediate impact is smaller. However, higher construction costs could slow new developments and affect jobs in architecture, engineering, and contracting. The energy sector, on the other hand, is facing a 10% tariff on petroleum exports, and this will be felt more in Alberta than Ontario. But some Ontario-based companies may see reduced investment and job losses. Will most of the GTA be unaffected? Well, for now, yes, but if job losses grow in manufacturing hubs, consumer spending could drop, which could eventually ripple into housing demand and retail markets. One great question is, how do US tariffs raise costs in Ontario? Many assume US tariffs only hurt Americans, but they directly increase costs here too. When US buyers pay 25% more for Canadian steel, demand naturally drops, forcing Canadian suppliers to raise prices at home. That means higher costs for builders, renovators, and manufacturers, amongst many, which get passed on to consumers like you and I. And since Canada and the US share deep supply chains, tariffs slow down production, delay shipments, and increase costs. A Toronto builder relying on US machinery now pays more and faces projected delays, driving up home prices. The ripple effect doesn't stop there. Tariffs push inflation higher, making groceries, cars, everyday goods more expensive. Even though the US imposed these tariffs, Canadians will feel the impact across multiple sectors. How long will these tariffs last? The White House says these tariffs are indefinite, meaning there is no clear end date. And based on past trade disputes, once tariffs are in place, they tend to stick around longer than expected. According to BMO's latest analysis, these tariffs are likely to stay for at least 12 to 24 months, maybe even longer. Canada and the US are a trade relationship, and unless there's a major policy shift, there's no immediate path to removal. One of the biggest issues is uncertainty. The BMO report points out that businesses are already holding off on investment decisions because no one knows how long this will drag on. So what about interest rates? How do these tariffs impact interest rates? Well, in response to the US tariffs, the Bank of Canada cut rates by 25 basis points in January, reducing the interest rate to 3%. And they are expected to keep cutting, possibly hitting a low of 1.5% by year end. If that happens, I'm locking in a fixed rate ASAP. I don't trust this government to keep inflation in check, and neither should you. The National Bank is calling for an emergency 50 basis point cut, and bond yields have already dropped 6% on Monday. If that holds, fixed rates could start with a 3 by the end of the week. The Bank of Canada is watching closely and may move faster on cuts if conditions worsen. Lower rates could ease some pressure from tariffs, but they won't fix supply chain issues or inflation. Now, for the very big question, how will these tariffs impact Toronto real estate? Well, as full-time real estate agents in Toronto, we've been closely monitoring the potential effects of the recent US tariffs on our market. So far, these tariffs haven't significantly altered our conversations with clients. Most buyers who are planning to purchase homes have not changed their plans, though some investors are keen to capitalize on any potential market weaknesses. This year, we have observed some slower activity compared to previous years, but the slowdown seems to be more related to ongoing affordability issues than the new tariffs. Listings continue to hit the market, indicating that sellers remain confident. However, the true impact of these tariffs remains uncertain. If this drags on, condos in the 9 to 5 are where we'll see the first price drops. Investors won't wait to see what happens. They'll start selling first. But if rates drop to 1.5%, it could completely offset. So the big question is, which will hit first? Fear or cheap money? And keep in mind, condos are often investment properties, and in times of economic downturn, investors might offload these units first. In contrast, freehold properties, typically primary residences, are usually the last assets individuals choose to sell. I would never sell my house first. That would be the absolute last thing I would sell. A key question going into spring market is whether buyer demand will decline due to increased market uncertainty. Historically, we've seen substantial swings in demand whenever uncertainty arises, while potential interest rate reductions, possibly down to again 1.5%, could stimulate demand. It's still too early to predict the full effect. What we do know is that certain markets such as Hamilton, London, and Windsor are expected to feel the brunt of these tariffs. Additionally, condos, particularly in the 905 area, might be more vulnerable to price adjustments. So what do you think about these tariffs? Will they have a big impact on Toronto real estate, or will the market push through like it always does? Could we see buyers hesitate, or will lower interest rates keep things moving? What's your move? Are you waiting to see what happens, or do you think rate cuts will cancel the tariffs? Drop your take in the comments. I read everyone. If you're thinking about buying, selling, or investing, and you want a strategy that fits your goals, let's talk. Click the link below to book a call with me or my team, and let's figure out your next move. If you found this breakdown helpful, make sure to like, subscribe, and drop your thoughts in the comments.